Inflation. Who benefits? Inflation being a cause of concern for the economy doesn't affect everyone in a bad way. It is a boon for a certain set of people. While consumers lose a part of their purchasing power to inflation, investors gain from it. Investors investing in assets affected by inflation, if held on for a long time, will certainly benefit from it. For example, an increase in housing prices might affect consumers. However, those who have already bought a house will benefit from capital appreciation. It's why I love inflation, but anything in excess will create a damage. It's why we should plan to handle the inflations rather than worrying about the markets and crisis. Real reasons for the inflations in 2022. Recession is a most trending word in market, but in economics, we can consider recession when there is a fall in GDP for last 2 quarters. However, it's not the same for all cases. There are many technical mistakes in the calculation and understanding the recession and inflation. I strongly believe that in 2022, we are facing a cumulative of all kinds of inflations, like cost push, demand pull inflations. Even we have structural inflation with the series of crises from last 2 years. One can understand a peculiar change in our society. After 2022 COVID, many people started to eat more, consume more. On the other hand, the constructions around the city reached new highs. It created a great demand for different commodities and food grains. On the other hand, with many lockdowns and operational issues, production is not as per the requirement. Crude oil prices followed by the Russia-Ukraine war may have serious impact on the inflation, but the main reason is high consumption. Can see the home sales in US after 2022 is more than ever. During June 2022, we got strong sales numbers of vehicles in India. Before giving an analysis on inflation in India, I like to share the past reports along with few global trends. Inflation in India. In between 1985 to 2021, the inflation peaked at 13.48% in the year 1991, and the inflation hit lowest in the year 2018 at inflation rate of 3.55%. The average inflation from 1985 to 2021 is 7.5%. From the year 1960 to 2020, the inflation peaked in the year 1974 at inflation rate of 28.6%. In the year 1976, the inflation hit the lowest level of -7.7%, which is the lowest inflation rate between the year 1960 and 2021. India has gone through negative inflation, for example, deflation in the past. And in the year 1976, the annual inflation rate in India is at -7.63, which is the lowest annual inflation between the year 1960 and 2022. Between the years 2009 to 2013, the average inflation rate in India is 10.4%, and these 5 years in the inflation rate is in double digit in almost every quarter. In between the year 1991 to 1998, the average inflation rate in India stood at 10.3%, and in these years, the inflation is also peaked about 15% in some months. Friends, it is why we must have returns on our assets or investment more than 10%. For example, 15% or above. Friends, if you are looking for genuine investment and research platform, can choose G Capital, which has the best research tools and good products. Company website is www.gcapitalindia.com. They have an honest and most experienced team in India for quality content and analysis with the best guidance for your wealth creation journey. India's headline retail inflation rate reported was 7.1% in June 2022, The central bank's monetary policy committee is scheduled to meet next between August 2 to 4, having already raised the repo rate by 90 basis points to 4.9% over the two meetings in May and June. Economists see another interest rate hike in the first week of August, which could take, depending on the quantum of the rate hike, the policy rate above the pre-pandemic level of 5.15%. Friends, as I have mentioned in the beginning of video, US has huge gap between interest rates and inflation than India. Here are the two main reasons for that. US is a want-based economy. People buy for more luxury or comfort beyond their need. So, governments like to give low interest rates so people can spend more and consume more. But India is a need-based economy, means here people prefer to buy things as per main needs. After subprime crisis, people afraid to spend more in US, so government made 0% interest rate for more years. Along this, US economy has a great impact on global nations, which made its inflation higher and interest rate at low or zero rates for years. Here are the many positive signs in economy. Fall in crude oil prices. Since last 3-4 months, I have been confirming that crude and oil prices will be cooled off before August 2022. Now, same thing is happening in the market. By August 2022, edible oil and crude oil prices will cool off further. Recently, crude oil prices crashed by 10% in a single day, and meanwhile, edible oil prices cooled off 20 to 30% in last 30 days. It's a great relief for everyone. In fact, a 10% discount in crude oil will impact on economy like this. GDP 0.2% up, inflation 0.4% down, current account deficit 0.3% down. Meanwhile, prices of other commodities like metals and agri-related products have discounted in last 3 to 5 months, which will ease the industrial requirements and may cool off the inflation rate. In recent times, when everyone confirmed about recession and high inflation worries, we have strong faith in our economy with job numbers. One can see the rise in employment numbers from India and US. It shows no recession in reality. Due to some series of issues, few industries and startups may have the layoffs. But in IT and other main sectors, we have strong demand for the employees. Now sharing few other important supporting points for my opinion. Business activity in India's service sector reached the highest level in 11 years on improvement in demand and capacity expansion. The S&P Global India Services Purchasing Manager Index rose to 59.2 in June from 58.9 in May. Work intake rose substantially. Encouragingly, service firms are securing new orders despite charging higher prices. Demand trends also have a regional flavor. Reopening of business centers, fresh hiring and return to office employees are strengthening demand in urban centers. Comparatively, activity in rural areas is seeing no major boost. The recently released June automobile sales numbers reflect this divide. Two-wheeler sales are subdued. In passenger vehicles, demand is seen to be driven by higher priced new products, utility and electric vehicles rather than entry segment cars. There is some good news in this week's Recovery Tracker update. Consumer sentiment and unemployment data reflected an improvement in rural areas and urban areas as well. And if that sustains in the coming weeks, then that could give some reason for cheer. And in recent times, we have strong rumors or misunderstanding of recession and economic worries. However, I request you to please go through this statistic and logics. In US, home sales in 2022 after COVID have reached new high than even from 5.3 million to 6.8 million. So, a fall in the home sales than 2022 is not bad. We have to compare with pre-COVID sales and still the home sales are stable as 2019 or before. India already faced highest inflation in history in 1991, 1990 and 2008, so current 7% is not a big issue. And as per this chart, the inflation is under control zone, which needs minimum 3 years for major crisis or recession kind of issue. Based on present situation, we cannot confirm any serious recession in India. The figures in the other nations like US, UK is somewhat bad than us. With above graphs and figures, one can understand that inflation is growing higher but still under control, and August 2022 will be crucial month for this. If RBI and World Banks can control in this duration, we can overcome recession for longer term. I strongly believe that we have positive economy for next 2 to 3 years, and major issues will be after 2025. India has new generations, both in age groups and income levels. We can see the shift in income levels from early 90s. Other side, if compare with Japan, Australia or any developed nation, we have more consumers and more purchasing power. So we need to worry for the major economic crisis. However, short-term volatility and corrections are very common in every economic cycle, and I strongly believe that Russian-Ukraine war will end by August and crude oil will reach $80 or below in next 2 to 3 months. Now, we come to the main question for investors and the common man, which is how to overcome the inflation. We can see inflation graph from last 20 to 50 years. Inflation chart which shows that inflation is not stable and fixed. Inflation is a natural thing in the economy. We cannot avoid that. We must understand the risk in the market and returns. Many investors just choose any idea or asset based on the past returns, but one must check the future. The average inflation is 10% in India. Technically, the average inflation from 1985 to 2021 is 7.5%, which means if one does not invest for 1 year, he will lose 10 lakh from 1 crore. So, one must always invest in products or assets which can give 10% returns. However, if we can get 15 to 20% returns, it will give more returns than inflation loses. Now, let me explain you about my Dosa theory. I remember buying a Dosa at 20 paisa in 1995 to 1998, and you might have heard from your parents or grandparents the same stories, like buying more items with 1 coin or 1 note. But now the same Dosa is costlier than 20 rupees. That's why I advise everyone, better invest in a Dosa so no one can make 10,000%, means 100 times in 20 years. Is it not a good idea? Just joking friends, because we cannot keep a Dosa for 20 years. However, we must understand that the prices of commodities like gold, silver or anything have been growing. Once, 1 kg gold was at 100 rupees, but now? All I am trying to say is, investing is always better than cash in hand. As money value can really fall, it's the power of inflation. But every time, it is not possible to beat the average inflation for all the items, because the return will vary. Let us check silver prices from last 2015 to 2020 and see the picture which compare returns on gold, silver and equity for last 21 years. Equity gave 340 times, gold gave 26 times and silver gave 22 times of return on investment. So we must understand the market and must have capabilities to calculate possible returns, or else we end up with bad returns. Equity is the only product which can give highest returns on this planet. However, many people don't like stocks or mutual funds. Even if they invest, they are not able to get 15% of CAGR to beat inflation. In a recent survey, I have proved that more than 70% direct stock market investors are having returns just below 15%, and 90% stock market investors have not kept the principal amount at least for 5 years. I have seen many investors who like to do experiments with investments. Friends, do not waste time and money. we have to make 20 to 25% per annum or average returns or as CAGR. If not, we are bad investors and we will fail to beat inflation. It's not me. One of the oldest and wisest wealth creator, Charles Munger, friend and partner of famous stock market guru Warren Buffett, he have confirmed the serious issues with new investors, that many investors are jumping into equity market with greed or overconfidence and losing the money. He stressed for discipline and money management. Some of you may ask me, why cannot we invest in only real estate or gold? It should be noted that in India, we have 12% max average return on real estate investments. Nothing is fixed or guaranteed. So, do not depend on only product or one idea. People in remote India made 5 to 10 times in real estate. Same time, investors from Amravati, Guntur area lost 40 to 70% valuation from 2018. And in Hyderabad, few investors made nothing in last 2-4 years. Another major mistake I have noticed that many youngsters like to buy home or flat immediately after joining a job. Most of the cases, they buy with a loan or invest. If calculate with average 10% of return, they have nothing more than the loss paid to the inflation. Because a flat may have double or triple returns, but interest rate and inflation may have eaten the profits. Please calculate once and you will understand the same. The main problem is herd mentality or recent event bias mentality in people's mind. So they like to think or do as per the market and others. Only few investors can think for the future. It may be repetitive, but it's fact that during 2022 market crash, many investors did not want to believe my analysis and predictions or any good advisor for both stocks and lands, but after 2 years, they have realized. After there is a rally in equity market, many investors have jumped to invest at the end of 2021 peak market and lost huge money. During 2022, we have more investors who rushed in to invest with rally in stock market and now it's just halved. Every time, real investors try to misunderstand and misuse the opportunity in stock market. In India, many investors do not like to believe in advisor or follow the honest advisors. Can see the recent survey which shows only 17% of investors are interested to accept the advisor. Meanwhile, many new and greedy investors like to believe free tips or easy money tips on social media. Even many rules and regulations exist. Many persons like to believe unregistered, unprofessional advisors without checking the SEBI rules and licenses. Many times we have warned our followers to be careful with pump and dump kind shares. Because we have noticed that many YouTube and social media influencers tried to give tips for small companies so everyone can buy. Without any great business, many stocks have grown 5 to 10 times. Similarly, day trading, option trading made many youngsters as losers. I am serious about this kind of issues because this kind of incidents give negative opinion on stock market. Repeatedly I suggested you please try to believe in SEBI registered advisors or PMS or mutual funds. Long-term investment is the only one thing which can give real returns. Can see the performance of Maruti and HDFC banks. Surprisingly, many investors and persons are trying to time the market or do extra oversmart analysis on market. In fact, no one can time the market or tell the trend of the market. In last 2 years, many have miscalculated the Nifty PE ratio for understanding the market trend. In recent times, Nifty is very bullish, even have more fears on market. Invest for long as per the risk profile. I know many of investors don't do this risk profiling, but it's great mistake. However, I am updating and advising my customers and followers to have better investment management plan. My special tips. Equity is the only one asset class which can withstand inflation in long term. SIP and positional trading kind of activities are always preferred in growing economy like India. Always have diversification while investing. Always have better analysis and advising team. Instead of thinking for short-term returns, better to prefer for long-term, minimum 3 years in equity. But where to start? Firstly, one should have at least 6 months of family expenses in cash or liquid fund reserves and reserves for food and edible items for 12 months. Above everything else, in a recent interview, Warren Buffett advised us during recession it's better to invest in your skills. What a beautiful advice that is, right? Please share your opinion on this video and share this video link with your friends and family members if you like the content of this video. Thank you. So do like and share this video and subscribe to this channel for understanding about our economy in depth.